stocks flipped into the red Friday afternoon after a rebound earlier in the session, and that put a cap on a rough first few days in August as the jobs report took center stage. The July jobs report showed cooling in the labor market, and this will play an important role in the Fed's decision whether to halt interest rate hikes next month. And with that, the S&P 500, the Nasdaq, and the Dow were all down to end the first week of August. But for me, the biggest non-news was that credit card debt has hit the $1 trillion mark for the first time on record. And not to be outdone, the government is working hard to reach annual interest on public debt of $1 trillion by 2029. And all along, I thought passive income was the idea. Who knew that passive outcome was the place to be? And so today we're going to take a look at the 1-year daily chart on the spiders, the SPY, and the close on Friday was 446.81. Now, I've pre-drawn these channel lines here to show you the bottom channel line running up through like this, and of course the top channel line running up through like this. Now, we've come below the 20 EMA. If you can see, the 20 EMA is here in blue, and right here in, say, yellow-orange is the 50 EMA below the bottom channel line. We'll see where we go. We're probably going to hit that bottom channel line. We actually might go through. If we go through, it's not a real big deal. It depends upon how sharply and how far we go below that line. But we'll watch this into next week because I think we're going to continue down here into next week and perhaps maybe the week after. Let's take a look at the oscillators moving through. Volume's not going to show you too much. Here in the MACD, we had a pulse back here with the cycles up and down, and we started to levitate and continue in an upward trend without much volatility once we got above this zero line here for the past several months. But now we've come through with the fast line in black coming down below the slow line here in red. We're still above zero. We still have strength, but it is weakening and a little bit of acceleration. But it doesn't look too severe to me on the downside. So we're just going to have to see how far that goes. I would imagine we will go to that zero line, perhaps below. So just keep an eye out here within the next 2 weeks or so. In the histogram, you can see pretty much the same thing. We were heading on down from this top here with a lower low here, and then again another low. So we'll see how weak this particular move is in the next week or two. Into the price rate of change, not really too bad. We're near that zero line, have some strength, but it does look like we're perhaps going to go below the zero line. We'll see how far down we go. We went down to near negative 25, say in this time frame here, late 2022, and then here in the March to April time frame. So it's possible we get down that low. Again, I don't think it's too severe. Now into the RSI, it is weakening at a 36.55 level, so we're moving on down. I wouldn't do any buying in this particular market. Let's see where we perhaps bottom and base. Into stochastics, again sharp downtrend here on the stochastics, moving pretty quickly below that 50 line. The slow line will move down in concert with the fast line, but the fast line decided to head down pretty quickly. So just keep an eye out. Same thing here in Williams, very fast on the downtrend. Again, the Williams seems to be a first mover of the oscillators either on the downside or the upside, so I want to see a move on the upside, so let's wait for that before you do anything. Moving back on up here to the price chart one last time, I don't think things on the downside are too significant at this particular time. Let's just watch to see if we can ride that bottom channel line or if we move down through to the 50 EMA. If we ride on that and then gain enough steam to head back on up, I think things are doing fine. If we break below the 50 EMA, then we stay on the sideline. And for today, that's ChewDog Charts. Thank you.